Hi, I am Professor Dr. N. Chandrasekaran. Today's topic is how to pay zero tax, part 2. In my previous video, that is on part 1, I just compared old versus new tax regime and various deductions that are available to the taxpayers to reduce the tax liability. Now in this session, that is under part 2, with the help of a board, I will explain with illustrations. In this example, case 1, an individual's total income is assumed to be rupees 10 lakhs before deduction. Under old regime, how much he has to pay tax? Under new regime, how much he has to pay tax, we will discuss. First, I will take up the old regime. For the income of rupees 10 lakhs. Deductions under section 16, standard deduction when for salaried as well as pensioners. 50,000. Under section 24, interest on home loan. Since the house is used for own use, self-occupied, 2 lakhs maximum interest he is claiming. Under section 80C, various deductions, LIC contribution, contribution to PF and public provident fund, tuition fees, etc. In total, maximum 1,50,000. Under section 80D, medical insurance claim for self 25,000, for parents below 60 years 25,000 maximum. Under section 80CCD 1B, employees contribution to National Pension Fund 50,000. So his total deductions amounting to 5 lakhs. So from the total income 10 lakhs, when you subtract the total deductions, you will get taxable income. That means 5 lakhs. 5 lakhs is the amount subject to tax, taxable income. Just I have computed up to rupees 2,50,000 nil. Next to 2,50,000 5%, that comes to 12,500. So 10 lakhs I have covered. Since the taxable income is up to rupees 5 lakhs, a rebate can be claimed under section 87A. So by applying this section under section 87A rebate, it comes to rupees 12,500 the maximum. So 12,500 minus 12,500, the net tax payable is nil, that means 0. So claiming rebate under section 87 is possible only if the taxable income is up to rupees 5 lakhs. It's definitely a music to ears of the taxpayers. In the same example, in the new regime, no deductions are allowed. So the same amount taxable income 10 lakhs, tax calculation up to 2,50,000 nil, next to 2,50,000 5%, 12,500, next to 2,50,000 10%, 25,000, next to 2,50,000 15%, that comes to 37,500. So 10 lakhs over, tax comes to 75,000 plus education cess at 4% on the tax amount. That means 4 by 100 into 75,000, that comes to 3,000. So net tax payable under new tax regime is 78,000. This is the first example. Now we will take another illustration, that is case 2. In case 2, total income is assumed to be rupees 18 lakhs. Under old tax regime, deductions under section 10 subsection 13A HRA, house rent allowance. In the first example, I have taken into consideration interest on home loan since he owns a house. In this case, he is not owning any house and he is paying rent and he is staying in a rented house. So he is eligible to claim house rent allowance. By applying the rule, the maximum deduction available to the assessee is 3,25,000. As usual, under section 16, standard deduction 50,000, 80C deduction total 1,50,000, 80D medical insurance claim for self plus parents above 60 years. In the previous illustration, below 60 years, here above 60 years. So 25,000 plus 50,000 maximum, total 75,000. Under section 80E, interest on education loan repayment. So 25,000. Under section 80CCD 1B, employee contribution to NPF, maximum 50,000. Under section 80EEB, interest on loan taken for buying car, electric car. It is a new section introduced during the budget 2019. So this deduction is available for two-wheeler as well as four-wheeler up to a maximum of 1,50,000, but in this case he claims interest of rupees 50,000. So total deduction comes to 7,25,000. When we subtract 7,25,000 from the total income 18 lakhs, the balance 10,75,000 called taxable income. When we calculate the tax, it comes to 1,40,400 including cess. In the same example 18 lakhs, now we will take up new regime. No deductions allowed, therefore the taxable income is the same 18 lakhs. By applying the rules up to 2,50,000 nil, next to 2,50,000 5%, etc., the tax computed including cess comes to 2,88,600. Now you judge. Under old regime 1,40,400, under new regime almost double 2,88,600. Now we will take up another illustration. In the next example, total income is assumed to be rupees 25 lakhs. Under old regime, the deductions claimed under section 16 standard deduction 50,000, under section 80C various deductions comes to 1,50,000. Under section 80G, donation to PM CARES Fund, Citizen Assistance Relief in case of emergency fund. This is called CARE Fund, 10,000. Under section 80D, medical insurance for self 25,000. Parents below 60 years, so maximum 25,000. Under section 80CCD 1B, employee contribution to NPF, he claims 40,000. So total deduction comes to 3 lakhs. So in this case, no HRA deduction, no interest on home loan, since he is residing in his own house and the EMI is completely settled, the loan amount is completely settled. So he is not eligible to claim interest on home loan or HRA. So the taxable income comes to 25 lakhs minus 3 lakhs, 22 lakhs. Tax payable including cess 4,91,400. In the same example 25,000, under new regime no deductions allowed, so therefore the taxable income is the same 25 lakhs. Tax payable including cess comes to 5,07,700. So when we compare old as well as new tax regime, 4,91,400 in the case of old and 5,07,700 in the case of new tax regime.